Hey, how are you guys? How are you, everyone? Happy Friday, happy start of new month, August. Let's make August the best month ever in at least in our trading, all right? So, how are you, Jacob? Hello, Jatin. Hey, Jets, what's up? Hello, Sina, Sven. Hey, Sven, how you do it today? I hope you went very disciplined, especially on a Friday. I know you have been having a challenge with your trading. Tell me, how was your day? Hey, Deb, howdy. Hey, what's up, Luke? Hello, Salman. Hola, Alex. Hey, Jatin. Hey, Faisal. How you doing? Randall. I wouldn't take zero DT now for Tesla unless you are a gambler, right? If you are a gambler, you can do anything right now. It was good, Sven. That's very nice. That those are good news. Let's talk later on Traders Lab, okay? All right, guys. So today is my last day in Mexico. As you know, I came for the week, visiting my parents, but also uh, we were celebrating my daughter's 15th anniversary. Uh, if you have any relationship with Hispanic people, the quinceañera thing, that's a huge thing. That's a huge thing in our culture. So it's, I don't know, like similar to Sweet 16 in America and Canada. So my daughter, I mean, she didn't have a party because she decided to go to a trip. Do you remember a few weeks ago? They went to an Euro trip. So my two daughters and my wife, they went into a ladies Euro trip. So no party this time. But we are very religious people. We are a very religious family. Uh, and we decided to go to church and say thanks and all that stuff. So it was a special mass yesterday. So that was the reason of our visit to Mexico. So just hanging out with our family, saying thanks to our Lord, because my daughter's life. So many, many, many things to be thankful and to have gratitude in front of everything, right? In front of everything. So very happy. But I will. Oh my gosh, I have an alert on Amazon. Let's take a look what happened. So today is my last day in Mexico, so I will come back to Texas tomorrow. So Monday everything will be business as usual. I really miss my things. I mean, I'm streaming from my laptop and my screen extender, but I miss my regular setup. So let's see what happened. Yeah, 100% blessed. Thank you, Chris. Thank you. Monday, I will talk to you, Chris. Uh, just give me a few days. I'm still on the road, so I need to come back to my house. And let's talk. Let's talk. I'm gonna reply to your email. So, guys, that's something really important. Just as Chris did, if you want to reach out to me and you want to discuss something in private, you want to discuss some performance coaching, if you want to just catch up with me, my email it's on the channel's description. So you just can grab my email, send a message, and I will reply back. Uh, Most of the days it's same day, unless I mean you send it like late in the night. But yeah, so if you want to just say hi, reach out. That my email is in the channel description, so it will be fun. to start knowing about all of you. All right. Hey, Orlando. Hello, Anne. Who else is here? All right. Now I'm intrigued about what happened in Amazon. Is it going to 200? I don't know. Hey, Sina, thank you, thank you. I mean, I need to thank you guys because I'm the one enjoying this. I mean, when we started doing these trade reviews, I'm not sure if you remember. I mean, I am kind of I mean, I'm not a guy. I'm not a shy guy or introverted or something. But for me, I mean, English is my second language, so this was kind of a challenge for me because even when most of you say like, "Oh, Neto, you are very fluent in English and everything," I mean, I'm never 100% comfortable, like speaking and trying to explain my ideas, my emotions, everything, right? So it has been a challenge for sure, but it has been a pleasure to read your messages, reading that you are getting better at your trading, building your own edge, making money from our lessons, from our trading plans. So I am the one that needs to thank you guys because you have been doing this journey a pleasant journey. So it has been a pleasure to be here, to learn from you, to share my experiences with you. So let's keep doing for a while. All right, let's make a deal. I'll try to keep doing this for a while, but you keep showing up. All right. Hey Gabriel, how are you, DC? Hi Linda. All right, let's get started, guys. So today, it was a very easy day. For being honest, today was a very easy day. We had a huge sell-off since the pre-market. So the easiest play was just looking for continuation on the sell-off. Why? And let me try to explain my idea. So when you have data, when you have something like a catalyst to have some sort of reaction, or to reverse a move or something like that. I mean, I understand that you can start looking for reactions, right? But after the sell-off that we had this morning, and then breaking all kind of key levels on the higher time frame, it was kind of easy to identify that we were just going lower and lower, right? Until we find a good bottom. And I think it was kind of easy to identify the real bottom, at least on the indices, right? So probably not that easy on the tech names or on the individual names, but for the indices it was kind of easy. I mean, when in doubt, please zoom out, look left. So if you go to your chart, go to a higher time frame, I don't know, like maybe the 1 hour chart, and you just zoom out, look left, you will see that the actual bottom of today was super easy to, I mean, super easy to, not to guess, but it was super easy to be prepared and react to that bottom, right? So with that said, the job today was looking for the names with the relative weakness and trading in the same direction than the indices, and that's it. I mean, that was your job, to identify the ones with the relative strength or the relative weakness. Relative weakness will be easier for you because the markets were looking super weak from the pre-market. So today, for me, it was an easy day. For me, today, for me, it was an easy day. And I'm not saying that you should be aware of earning reports, you should be aware of uh, rate cuts, you should be aware of anything external. I mean, just looking at your chart, just doing technical analysis, today was kind of an easy day. So I just hope that you had a good reading on your charts and you had a good day. So let's get started today. So AMD, and this is a very good example of relative weakness and relative strength, right? So as you can see here, market started dropping from the first minute of the bell, right? Market started dropping from the, I mean, actually from the pre-market. But what was happening with AMD? It was holding. It was holding. Can you see? Look at the look at the drop on SPY. Look at the drop on QQQ, and look how AMD was holding. So once your individual name gives up with the hold and start following the indices, this is when you start looking for opportunities. So right here, you have right here Jack Anthony finally went short. I know. And I, I texted them this morning, and I was like, "Hey, dude! I mean, look what I did. What you did?" And then they sent me their play, and I was like, "What? A short position for you?" And yeah, I was laughing. I was laughing because yeah, they are like super uncomfortable going short. And it's not like they are short averted. It's like they are going with the overall market. So right now we are in a bullish market. We are in a bullish market, that's for sure. So they are looking for the relative strength every day, and that's easier for them. That's pretty much their style. That's pretty much how they like to trade. So they are just being loyal to their style, right? So today, yeah, today I think it was like the third day of the year with taking shorts, right? All right. Okay, so today I was telling you, so once your tech name gives up on the hold and start following the indices, you can start looking for your entry points, right? So right here, we broke the 5-minute opening range low. We broke the 5-minute opening range low. Have had good and decent displacement here, and this is something that I like. This was a day, this was a gap on the daily chart. All these box here, it was a gap on the daily chart. So we broke the 5-minute opening range, came back, retested, and you can open your position right here. Look at the reaction of this 5-minute opening range low. And with the indices dropping like they were doing, this was a very nice opportunity. So you open your position right here on this candle, on this rejection candle, retesting rejection candle. You open your position right here at the bottom of the previous candle body. Your risk, it's at the top of this candle, or to the 5-minute opening range low, and you start aiming at least two low of the day. And let me show you, this was a 2.9 risk reward ratio trade, right? This was a 2.9 risk reward ratio trade. So I know this reversed really well, and look at this. This is why this was a strong key level. This was previous week high. So this was a solid, strong key level to break. So after watching this reaction here, you want to go out. You want to go. I mean, especially if you are same day expiration, you want to go out after watching this kind of reaction right here on a strong and solid key level. And this is a higher time frame key level, right? So this is previous week high. So you just want to be out right away of this. You don't wait for your stop loss to be here, right? So anyways, so this was a very nice trade. And then look at this. Then when the indices bottom, when the indices found the bottom of the chart, when the indices found the bottom of the chart, let me move a little bit. All right. So right here, at this bounce right here on the previous week high, it was the actual bottom of the indices. Are you following the crosshair line? So right here, guys, right here, you are having, right here, look at this. Right here, you are having the change of character on both indices, right? Finally, you are having a higher high, higher low. So this is your change of character. And what happened to your individual name? It started following the indices. It started following the indices. So your indices are going higher and your tech name is following them. So what are you doing now? Well, you are looking for nice reactions on key levels. So this is today's open. So this is today's open. I know this is maybe an immediate retest, but looking how strong was the momentum to the upside on both indices and this individual name, I will take this as a nice retest or nice reclaim of this opening price, and I will open a new position here, but now to the upside, right? Now to the upside. So my risk will be the bottom of these two candles, and my target will be this 172.26. This is the key level on the 15-minute chart. But look at this. Even if I was aiming to high of the day, look at this. Even if I was aiming to high of the day, 5-minute opening range high, it was a 1 to 2.3 risk reward ratio trade. Once you break this and hold, the next key level, it's this 172.26. This is a key level on the 15-minute chart. And once it holds, you go to the next level, right? So your next level, it was 173. That was previous day low. I mean, you never retested it, but you actually went like super close to it, super close to it. So that's how you manage your positions, right? You start, I mean, if you want to start trimming, selling into strength with every push, that's fine. But once you are on runners, or once you are just, managing your position on every run, well, you look at the breaks, at the break of your key levels, and you see if there's a strong reaction rejecting your key level, well, you start trimming, right? But if you see something like this, I mean, rejection on your key level, but it was holding your key level, well, you just, I mean, keep your position into the next level, right? That's how you manage your position. All right, so Cuba, hey Neto, how would you scale this AMD trade with 2 contracts? Which one, Cuba? The long, I mean the calls or the puts? Let's talk about both, right? So if you were with just 2 contracts here, I will, like for example here, you take your puts here, and maybe you trim your first contract at low of the day. Yeah, maybe you trim at low of the day, and the other one, once you have this at low of the day, the other one I will set it to break even on the underlying, not on the contract, but on the underlying. Or if you have a clear change of character, or a clear shift on the move, like for example right here, this is not very clear. This is not very clear because this is actually kind of coming for this impulsive candle. It tried to come back, but then it's a strong rejection of this pre-market low. This 168. This is the pre-market low. So once you start holding this, maybe, I mean, you cut your position on this one, on this 10 10. So you don't wait to the actual first stop loss. You cut right here. So that's how I will do it. My first contract, low of the day, and my next, I mean, I will move my stop loss to my entry point. That's how I will do it. Faisal, you took AMD calls 10:30 right here. Well, that's a nice break or reclaim, break and hold of this 5 minute opening range high. And where did you exit, Faisal? Yeah, I like this. I mean, this is a nice reclaim of the high of the day, reclaim, break and hold of the 5 minute opening range high of the day. So I understand this. I would like, like the some displacement and retest, but look at this. I mean, this is a nice hold of the level. So 2 KMD for okay, for 173. Okay, so you tried this key level. That was a very nice one. That was a very nice one. I'm just curious how I'm just curious where did you set your stop loss right here? That will be nice to know. All right. Um, Cuba, this will cut almost 3 hour trade to something closer to 1 hour. Well, I mean, yeah, Cuba, that's how I will play it. But if you want to be more aggressive, maybe, I mean, you start cutting your position once you get to low of the day. And if it retraces pullbacks and have continuation to the downside, you can open another position, right? I mean, this is completely depending of your buying power and how do you want to manage your trades. Because if you want to be very aggressive, I mean, you buy here and you sell your two contracts right at low of the day. If it breaks, if it breaks, it will come back to retest this low of the day. So you buy another position on the retest. And again, you sell at low of the day. So you start taking this kind of super aggressive scalping trades, scalper trades. And that's another way to do it. I mean, if you want, so one way it's okay, you sell one of your contracts right here, and the other one, like you move your stop loss to break even. And if it hits, well, it's okay. But if not, I mean, you keep moving your stop loss so you have something like a trailing stop loss, but not with a percentage. Maybe you move your stop loss to key levels, right? And the other way to do it, it's you buy your two contracts here, you sell at low of the day. You have a pullback or a break, and then it comes back. And when you see market structure forming, you buy another position. And where do you sell? What, again, at low of the day or on the push of the break of low of the day. So that's two different ways to do it. I'm not sure how you will feel more comfortable holding. Uh, because I don't know what will be better for your mindset, giving away some profits because you let one contract go break even, or selling your position right at low of the day, and this thing goes to 165, and it might be double your profit. So if you don't get any FOMO on this, maybe that's something that you can do. Like, you buy here, sell at low of the day, you let it play, and when market structure plays again, you buy another position, maybe a different strike, or maybe the same one, but you start doing like different plays based on your market structure. I think that those will be my two different ways to play with two contracts. Uh, Yeah, well, again, so Jacob, so reading your message on the chat, this is what I am having an issue with. The risk to reward does not add up with such scaling. Well, if you don't want to give anything back because you consider this is a small position, sell at low of the day or sell at key levels and start stacking small wins. That's a different thing to do. Yeah, exactly your last comment. Yeah, so I will prefer to increase my win rate and start having small wins right here instead of like holding and expecting to go lower, right? Because if you close your position here, you can always open a new one on the break, right? Or on the break and retest. So yeah, that's another way to do it. That's another way to do it. You may miss some bigger moves, but I mean, if your strategy right now is just to stack small wins, that's also a good strategy. So what I want to tell you is there's not a good or wrong response to this. I mean, whatever you feel more comfortable. So just, I mean, if you feel better, let's say I'm gonna speak from the negative side, right? So if you feel better with FOMO instead of leaving money on the table, I mean, you need to decide which of the emotions you can handle better, right? Or if you are, I mean, I think the right way to do this is looking at your trades from the gratitude mindset. So I will be very grateful to have some profits here, even if it go lower, right? Because I mean, if the market gave you the opportunity to make money here, I will be grateful. Just because I made some money here and my idea ended working out. Yeah, no, don't scale up until you feel comfortable with whatever strategy you want to use. All right. Okay, guys. So let's go to the next one. The next one is Amazon. What happened in Amazon that triggered my alarm? Well, this is what is going on. Look at this. So Amazon was another name with relative strength against the indices, right? As you can see here, indices started dropping from the very beginning, and Amazon, what was doing Amazon? Amazon was holding and even going higher, right? Even going higher. And look at this. I have these two circles here because this could be a good example of the 84% rule. All right? Let me explain. Let me explain. So here you have a clear break, displacement, and retest of two different key levels. Pre-market high and the 5-minute opening range high. All right. So those are your key levels here. But on this candle here, I mean, you had some reaction here on this retest, but on this candle here, the play is over, right? The play is over, starts playing around here, but then it reclaims the same level. It reclaims the same level above the 5-minute opening range high and the pre-market high. So if you look at this, let me show you. If you look at this is an actual higher low from the day. Can you see? So this is an actual higher low from the day. So here, even when we didn't have any reaction right here, this is keeping market structure intact. All right. So with this reclaim right here, I will not be opposed to take another position or the first position right here based on the 84% rule idea, right? Because right here, we didn't have any reaction. Look at this. We didn't have any reaction right here. But right here, we are actually reclaiming this key level, and also both indices already found the bottom, and they are grinding up, right? They are grinding up. So this will be a nice entry point based on the 84% rule. That's why I have these two circles right here on the same level that I will try to take an entry, because I want to show you how, despite going lower my key levels, the market structure is intact. So I will open my position right here, right where I was waiting for my position on the first chance, and then I will be looking, or I will be aiming for high of the day and maybe higher, right? I mean, if I'm looking for the market structure, this should be something like this, right? Something like this, higher than this. Maybe retesting this and then going higher. So this is the idea that I had right here, or this is the idea that I will have right here. But it didn't, it failed to create a new high. So, however, look at this. From this entry to here, it was a 2.8 risk reward rate to trade. So if you are watching this, maybe your target can be this 15-minute chart key level, and this is a 1 to 2.4 risk reward rate to trade. So nothing wrong with, taking profits right here. It's already 1 to 2 risk reward rate to trade. It's on a key level, and after watching a few rejections right here, I will be taking majority of my position right at this key level, because failing to create new highs from this, right? All right. So that's the only play that I was watching here. Then after it started dropping just as the markets. But look at this. This is relative weakness, right? This is relative weakness because yes, the indices were dropping, but not as hard as this. But you know what? I mean, I didn't see any good opportunity for an entry right here. So I think, yeah, I think this will be my only position for Amazon today. What do you think, guys? What trades did you take today? I'm gonna share the trade that I took today. I actually had an amazing day. I took spy puts at the opening bell. Uh, I will show you in a second. It went all the way to 150%. So I had an amazing Friday. It was a 30 minutes work day. I actually went to have breakfast with my wife. We went for more tacos because that's the only thing we want when we come to Mexico, breakfast of tacos. Because in Texas, I mean, we don't have like, like Mexican style tacos. So every time we come to Mexico, we try to take breakfast every day, different tacos. um, all right. Randall, you took that 10-10 candle trade. 10-10. Oh no. 10-10 candle trade for a small loss. You were waiting for the higher high, right? You let it go to your stop loss break even, Randall. DC mariscos. No, no, we have very good mariscos, seafood. We have very good seafood in Texas. Now, when we come to Mexico, we are always looking for tacos. And there's something that I like a lot. Not sure if you know it. It's called pozole. It's kind of a soup with corn and pork meat. It's that's delicious. So Randall, okay, so Randall, you tried your entry here. You were waiting for the higher high. That was the play. That was the play. Just, I mean, just make sure, Randall. I know that was the play, right? But make sure that if you already had your 1 to 2 risk reward ratio trade, I mean, take some, take some. There's nothing wrong with taking some profits right here. Especially look at these rejections here, rejection, rejection. Finally, you got something here. Finally, you got something here tried to break this key level, probably you, if you didn't have this 220 key level, if you were not aware of this 220, you may miss this, right? I mean, 220 was a strong key level, probably a lot of selling right here, right? A lot of selling right here. So that was the thing. Cabrito, Alex, the cabrito, it's a baby goat, baby goat. That's delicious. That's kind of the specialty of the region right here. Um, Yatin, I took AMD pre-market low reclaim once indices were bouncing. Pre-market low was oh, but you said AMD. Okay, let me go back to AMD. Pre-market low right here. Yeah, well, look at this reaction right here, right? Reaction right here. Indices were kind of just bouncing there. This was an aggressive entry because I wouldn't know if that was the bottom for the indices, right? Because right here, you still don't have a change of character or something. Key level 168. Yeah, I mean, I think you were lucky, Jatin. Nice play, nice play. I mean, I understand what you tried here. I understand what you tried here. It just, I mean, not even the indices were still, like with the change of character. So I will not be completely sure that this is the bottom because these literally could bounce here and go lower, right? So nice trade. And that was the Amazon trade. So not sure if anyone took an Amazon trade today. The fail of these 220, let me show you here on, this is the 1 hour. All right, look at this. $220 right here. So if you have identified this channel here, if you have identified this channel here, look at this. You come here, you look how it's struggling with this 220, and you look for the fail of this area here, right? Of this channel right here. Or the fail of this 218.43. 218.43, look at this. This is actually the area of the reaction. It broke, came back, retested 218.43. For me, this 218.43, that's external liquidity because that's a I don't remember how many days it's here, but this is a few days or a few weeks out. But this is a previous low, right? This is a previous low out of the shade of the previous day candles. So that was a very nice key level to watch. So after the fail of these 220 and after the fail of these 219, that's the bottom of this channel here, this consolidation area, I will be start looking for the next, look at this key level here, right? I think that was the top of the previous channel. So again, I think Amazon was also a nice and easy play. Oh, let me take this out. I think Amazon was a nice and easy play, but you need to be aware of the higher time frame. You need to be aware of the higher time frame. Even if you go to the 4 hour chart, look at this. This is even easier to identify, right? If you can see that this is the channel right here. Look at this. What is this? 220, 219.50. If you can see this area here, that was kind of easy. That was kind of easy, right? Let's go to the 1 hour because everything is having a good pullback. All right. Okay, guys. So let's go to NVIDIA. NVIDIA, again, some of the stronger names were holding despite indices dropping, right? But once the individual names start dropping and going on the same direction than the indices, you start looking for your entry opportunities, right? So we had this retest of the 5-minute opening range low, and if you were looking for a 1 to 2 risk reward opportunity, this was it. I mean, I will be waiting at least for the low of the day, and it will be almost a 1 to 4. But you should be always looking at least your 1 to 2 risk reward ratio trade. So you can have some here, especially if you see that this is struggling. Well, you trim your position here, you start managing your position right here, and it's okay because you are already 1 to 2.3 risk reward ratio trade. So no shame on taking some profits right here. No shame on taking some profits right here. And if this go reverses like it did with the indices, well, you already had some profits right here. Okay, so again, after this recovery here, look at this, with these candles here, you were having a higher high, 1010, just as we said a few moments ago, right? 1010. This is the reclaim of key levels. This is the change of character on your individual names. And now this thing is showing relative strength because yes, the indices started to grind up a bit, but look at this. I mean, this is going straight vertical, right? This is going straight vertical here. So you can start looking for entry positions right here. So now you have the break, displacement, and retest of this 5-minute opening range high, and you can open your position right here. You will be buying almost at high of the day, but look, all these strong momentum, all right? Look at this strong momentum right here. So I wouldn't be so worried if you are buying almost at high of the day, just watching this previous move, right? And also indices were just as strong as NVIDIA right here, right? And remember, NVIDIA, AMD, Broadcom, all of the SMCI, I mean, all of the semis have been super strong the past days, weeks, months. So after watching this kind of recovery, I wouldn't be like this worried of buying almost at high of the day. All right. Cuba, you took this exact Nvidia trade. Which one? Puts or calls? uh, Alex, that was one of my trades. Wanted to reach the same level, but didn't go it. So you are talking about this one, right? Okay. Sven, 957. 957 here. All right. So that was the same entry here. And all of you were expecting this. I know. I mean, all of you were expecting at least this to low of the day. But look at this. I mean, even if you didn't get low of the day, this is a 1 to 2.3 risk reward ratio trade, right? Sven, 957 out, 1001, 957, nice. 1001, that's super nice. 1 to 2 risk reward ratio trade, right, Sven? Great, great. Congratulations, Sven. Congratulations. All right. Well, So right here, guys, right here. So you already reclaim high of the day. You already reclaim 5 minute opening range, break, retest, and you go higher. How higher? Key levels, guys. Key levels. This is previous day low. So this is previous day low. I will be aiming to here. And look at this. This was a 1 to 5 risk reward ratio trade. So you have a lot of room right here. It rejected and finally broke later in the day. I mean, I wouldn't be waiting all this. Maybe after this rejection right here, oh, maybe after this rejection right here, I will be trim majority of my position, or maybe scale out everything right here. 1, 2, 3, 4, 5, 6 candles trying to break previous day low. I will be out on this candle. 1048. Cuba, you did the same thing than Sven. Good. 2.6 risk reward. Congratulations, Sven. That's the kind of place I like. All right, guys. Are you ready? Are you ready for Tesla? Let's go to Tesla. Look at this. This was completely same. This was a twin of SPY QQQ. Can you see? A huge drop to the downside, break, displacement, retest, 5 minute opening range low. Look at this nice reaction, rejection right here. So you open your position right here, 947. Your risk is at the 5 minute opening range low, top of these candles here, and you should be aiming to two different places. First could be this previous week low. Look at this. This previous week low, it was a 1 to 2.8 risk reward ratio trade. But I would like more the 300, right? 300 right there. 1 to 3.3 risk reward ratio trade. And after watching these candles, look at this. This is a strong break and hold below this 300 key level. I will be looking for more, right? 299, 299, then 298. So yeah, so after breaking your key levels, you keep pushing your long short position tool, right? Just to identify. And remember, guys, there's nothing wrong with managing your position. There's nothing wrong with locking in some profit. So with every push, you can manage your position, lock in profits, lock in profit. And when you finally hit your main targets, you make sure that you are just riding runners, okay? This was your second Tesla trade, Tesla puts. This looks super textbook, I know. Look at this, break, nice displacement, retest, 1, 2 candles, second candle, confirming the direction of this move, aligned with the both indices. Yeah, this is textbook 5 minute opening range low, break and retest. Cuba, I watched your yesterday trade review in the morning in the European Union and heard about how you can enter aggressively once the candle starts forming below above the retest candle. Yes. I entered just before Tony and Jack told they enter. That's good. That's perfect. I mean, this is exactly what you need to start doing, Cuba. I mean, once you start taking your own trades and once you start identifying these kind of opportunities by yourself, you just lock out of all noise, right? I mean, for being honest, it has been a while. I don't catch up on the live trading because for me it's kind of noise. Because look at this, I feel that I'm super good at taking puts, and the boys, they just took the first put position since a few months ago, right? So that's why I just don't join the live stream, because it's noise for me. They are talking about a completely different idea than I have. So watching my own charts, identifying my own correlations, identifying my own key levels, that's the path to be a consistent and profitable trader. I never met a trader that started making good money just copying others' trades, right? So you need to learn from your coaches, you need to learn from your mentor. The technicals and mechanicals about a strategy are kind of easy. You should have a few months to master the setup, the strategy, and then the real challenge, it's you. I mean, once you have a system in place, the real challenge, it's managing your emotions, following your plan, or even preparing your own plans, right? So you need to plan your trade your plan. If you were watching this weakness since the pre-market, you should be aiming to some levels. You should be ready with your key levels on your chart. This way you can feel prepared and take your own trades, right? Span, you should hold longer, but a little fear of zero DT. Yeah, well, I mean, Fridays you need to be a little bit conservative. Or not sure if you read my. Yeah, I think you do, right? My Friday rules. I mean, on Friday, you just want to play with profits and a small portion of your profits of the week. So Fridays are kind of earned privilege to trade, right? I mean, if you have been uh, performing well on the week, following your rules, managing your risk, and you are green on the week, you can take trades on Friday. But I mean, don't take too much of a risk. I mean, go with smaller size or only risk a portion of your profits. All right. Um, Cuba, super proud of this one, but only two cons, so scale at low of the day. Dude, that's fine. That's fine. Jacob, if that was the plan and you follow your plan, that's a huge win in my book. That's a huge win in my book. I no longer touch zero DTs. They are too heavy mentally for me to handle. Yeah, I mean, zero DTs and Tesla, not a good combination. That's not a good mix. That's not a good mix. All right, guys. So, okay. So, same thing that most of the names: drop, entry, opportunity, keep dropping, hit key levels. Look at this. This is 298. This is the rejection or the bounce on 298. So that's the same time that indices start, found their bottom and they started bouncing, right? So you start following market structure on your individual name, and look at this. Right at the same time that you have this reclaim, displacement and retest of your pre-market low, what's going on the indices? Change of character. Change of character. So this is a good place to start trying to find a long position on your individual name. So if you found this opportunity here, market structure is starting to build. What you want to do? Well, you want to enter a position and see if you can hold higher highs, higher lows, and then market the structure to continue, right? So if you open your position right here at the break and reclaim, break and retest of pre-market low, you open your position in one of the two candles right here, 10:15, 10:16. Remember, 10:10 was the moment when everything had their change of character, right? So now you are just looking for the entry position to the other side, to the upper side. So right here, you open your position here, your risk is very clear, pre-market low, and you should be aiming to key levels, right? So your first key level is this previous day low. So, but look at this. This is a 1 to 6.2 risk reward ratio trade. But if you were aiming, let's say, to 305, look at this. 305, it was a 1 to 4.5 risk reward ratio trade. So you can start playing with your, with your key levels here, or with your relevant levels here. And this is the way you do it, right? Here, I would like to have, like retest something around here going for the high of the day, but this is when you start looking how it fails, right? How it fails. So this is the way you start. Look at this. You actually got a higher, a new high of the day. Look at this. That was nice. And then another drop. Well, that's Tesla on Fridays. That's Tesla on Fridays. Jatin, hey Neto, I did not enter in Tesla because for me, 298, 302 was a strong demand level. It's a strong demand level. It's a strong demand level. On the higher time frame, there wasn't enough room for me to trade it. Do you think I was thinking right? Yeah, I think you had a nice trading thesis right there. So, I mean, looking at this weakness, you were right. I mean, you can have, no, well, not sure how you trade, Jatin. We kind of trade same day, a few minutes long trades. This is kind of a scalping, right? So if you have a very good idea of where the bottom could be found, you just, I mean, you try to take the squeeze, right? I mean, if you already know that this 300 to 98 area is that it's your demand zone. I mean, you can take the ride to the squeeze zone and take advantage of this. I mean, on a Friday, this might be 60%, 70%. Yeah, it's a 302.50. Look at this. This is a 302.50, and you take it to 298. Yeah, for sure, this was a more than 50% trade, especially on zero DTs, right? So, but do you think, do I think you were right? If that was your plan, if you were trying to hold longer, that was a perfect plan because this actually worked just as you think, right? This actually work as your demand zone, and then, well, this is what other traders call your pullback longs, right? I mean, on the higher time frame, you are waiting for this pullback into demand, and then you take your longs out of this demand zone. That's fine. I mean, that's another way to do it. So just as you can see here, you can. This is the magic of options, right? I mean, you can squeeze a name and make money either way going, right? So if you were watching Tesla, you made money to the downside, you made money to the upside, and later on the day you may made money to the downside again. So that's something I like for Tesla. All right, guys. So let me go to the next one. This Microsoft thing, it's giving back some of the profits from the earnings call. If you remember, Microsoft, if you remember, we had this God candle here, but yesterday we gave back 50% of this candle, right? We gave back 50% of this candle, and today we are actually almost giving back all of this candle here. And guys, this is completely normal, and this is completely healthy, right? If we can retest this 520 key level here, previous all-time highs, if we can have a retest of this area here, this might start going like here, right? I mean, it will start making market structure. But this is a nice retest of previous all-time highs. This is a very nice retest of previous all-time highs. So this is not a crazy move. This is not something crazy. I mean, this is still bullish. If we break below these all-time highs and start again dancing on this channel here, well, that's another story, right? But I mean, a pullback to these previous all-time highs, that's a nice opportunity for longs here, right? So today, as I was telling you, so we have this drop on the Microsoft pricing, and look at this break, displacement, retest, previous day low, and what were the indices doing? What were the indices doing? They were dropping nicely, right? Is this a good opportunity to enter? Yes, it is. It's just 35, too aggressive for me. I will be waiting for this one. 943, 942. So now you have more information. And look at this. This is trying to tell you a story, right? It's flirting with this pre-market low. It's trying to go higher. Strong rejection of this previous day low. And look at this. So this went all the way to 525. So any opportunity here, so this was the first opportunity, but then we had this break and retest of the 5-minute opening range low of the day. So you can have another shot to the downside, and then you have another break and retest of previous low of the day, retest, rejection, on what is this? 529. Round number, side number. I think this is actually a strike number on Microsoft, right? So rejection, 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 hard rejection. So, and look at this. This is the exact moment for Microsoft when the indices found resistance on a daily chart key level, 557.21, and this is 624.18. 624.18. So this is a nice third opportunity for going short on Microsoft. Okay, so I just want to show you how not only price action but also price action plus correlation with the indices can help you to understand what's going on and to take decisions. All right. Okay, that was Microsoft. This was Palantir. Look at how nice break, displacement, retest of the 1-minute opening range. Huge rejection of this 154. And look at this. You enter into your position here. Stop loss at the top of these retesting candles, and you look for the key levels, right? I mean, if you were looking for low of the day, this was a 1 to 3 risk reward rate to trade. If you were looking for this 151.90 key level on the 15-minute chart, well, this was a 1 to almost 4 risk reward rate to trade. So this is how you start looking for your position. And then the other way around, right? You start having higher highs, higher lows. This is your change of character. So now you start looking for reactions around key levels, right? Around key levels. So this is the reclaim and hold of the 5-minute opening range low. But look at this. The indices were already bouncing. Indices were already bouncing right here. Look at this. Well, this is not very clear, but we said 10-10, right? So, all right. So this reclaim of pre-market low, this is your 10-10 candle. That was the change of character on both indices. So you can start looking for your opportunities right here, right? I don't see like a very nice and good opportunity right here, but this is how you start looking for market structure once you had your change of character and the indices are pushing the same way, right? You're very welcome, Andreas. All right. Apple. Apple actually following the indices. What about that? All right. So this was kind of easy, right? Break of key levels, break of key levels, break of previous day close, break of previous day low, and you are just following market structure and you are look at this. Once the market started going higher, 1010, Apple was still showing relative weakness. Relative weakness. Right here, 1010, market started going higher, but Apple remained heavy and started going lower. This was another good opportunity. And what happened later in the day? It actually dropped a lot more, right? It actually dropped a lot more. And well, that was all for me, guys. I hope that you have enjoyed today's session. As you can see, we can. Uh, I hope that you learn how to identify uh, trading opportunities with the strength of the market, and then once not only the market but your individual name finds a change of character, finds the bottom of the move, finds their demand zones, and start going on the reversal direction, well, you can start looking for opportunities to the other side. All right. So, guys, thank you very much for coming. We had kind of the same amount of people every day. I will thank you forever if you start bringing other traders, if you start sharing, spreading the word about this exercise that we do every day. So you know the drill. Like the video, subscribe to the channel, and guys, please, please, please take advantage of the weekend. Journal your trades, learn the lessons. You already paid for the lessons, guys. You already paid for the lessons, so take the most out of them. Journal, prepare for the next week, refine your charts, clean your charts, and I will see you on Monday. Thank you, guys. See you soon.